Okay, perfect. Start off with gold. Okay, so gold, the past, I think 2 weeks or a week, it's just been ranging, right? Consolidating, building that liquidity. It's also at all-time highs, right? If you go on the weekly, it's at all-time highs right now. So, as I always say, when gold or any pair is at all-time highs, I wouldn't be predicting any higher time frame moves. I'd just be going off of wherever the liquidity is. Um, okay, so let's start off with where's Monday? Uh, all right, so on Friday, what ended up happening? Friday of last week, gold respected the highs right here. Okay, came all the way down, trapped all the buyers that were buying throughout the week, and then came for the extreme. All right, came right here, and yeah, pretty much. So before that, though, my bias was the highs only because the market was engineering a lot of liquidity to the upside, right? There was a BOS to the downside right here, so that's the reason why I was targeting the highs. Um, so also I didn't really, I didn't take my TP wasn't up here only because as I said, gold's at all-time highs. It doesn't have to make another higher high, right? It could just grab liquidity and drop as it did today. Nevertheless, BOS to the downside right here, right? It induces sellers into the market. The market comes all the way to the extreme right here. Does all this right here, builds liquidity, as you can see. Okay, little BOS to the downside right here. BOS, and then all it does is pull back, build that liquidity right above here. All right. So your eyes should be right above this line right here. All right. So the market on Friday of last week sells off, right? Monday comes, I mean Sunday comes, builds some highs over here, dumps even further, and comes all the way to the extreme. Believe oh this is Monday. Monday, okay. Okay. So let's go to all right. So what gold does, number one, there's a lot of liquidity here. Okay, you have to understand all this was structural liquidity, so it can easily come for all that. So after this low was taken, it is possible to see buys occur, but because there's a lot of liquidity to the downside, right? Structural liquidity, you have to understand the market does things like this on purpose. So the fact that it respected the lows each time, creating newer higher highs and stuff, and pulling back and respecting the lows, it just builds liquidity for later, right? So once the low was taken, and then the market went up higher, grabbed all this right here. Let me actually go on the 15. Grabbed all this right here. Now we could look for some sell opportunities, okay? So, would I look for sell opportunities right away? Not really, because obviously there's liquidity above too. So you have to wait for what the market does, right? Plus there was a BOS to the downside. So, after taking out this high right here, the market moves lower, right? Engineers that liquidity to the downside. Actually, no, takes out the low. All right, so after taking out the low, respects the high, so no entry for us as per the model, because that's just building liquidity, right? So you can say there is liquidity above now since the low was taken out. And then the market moves lower. Let's go to lower time frames. Yeah, same thing. All it does is respect, pull back, take out the low again, and then a little BOS to the outside, right? Uh, and then moves lower, grabs that liquidity, which is right here, this one right here, and then finally starts having the move. I don't believe there was any. Oh, there was an entry actually. I remember. If we go to, let me actually use a rewind tool. It's getting annoying. Replay. Go to the one. Yeah, but I took a loss exactly there. Then this Rapid. Where'd you take your loss?
Hey Abid, exactly where you're about to say. So I thought I saw an entry, and then price just wicked me out and then went flying in the other direction.
Wait, can you show me?
I don't think
Just
I can
annotate.
annotate. Uh, it's just basically there on that last inducement low.
From the
Where,
extreme, right?
yeah, from the extreme.
Oh, so you took an extreme entry.
Yeah,
Okay, okay,
yeah,
yeah,
right there. Yeah, right there where that inducement low is there, and then I
this one
put
right
the
here.
stop below the liquidity block. Yeah.
Okay. Yes, the market unfortunately decided to go lower, which is kind of annoying because I had an entry there too. Nevertheless, it's just one of those things, right? The market can induce lower sometimes. Um, may I speak? Yes, you can speak.
Can you hear me?
Yeah, yeah, I can hear you.
Yeah. Hey. Abid, I've been struggling with see when like I understand like the entry models and all that like about like building liquidity, but the one part where I'm struggling with, like I've tried to get help from other students, but I can't seem to understand it as well. But it's like, if you have multiple highs, right?
Okay.
And like you're waiting for like the highs to get violated before you look for your um for your cell model, right? But I have a problem where it's like I won't really know like like how to explain it. Like if there's multiple highs, like I've seen sometimes that like some people would like enter after like the first one's taken out or the second one's taken out, but I never know like which one, like because I understand on the lower time frames it's supposed to be you're supposed to like sell above the oh sorry below the liquidity block for cells, right? So like on the higher time frames, like if you have those multiple highs and let's say after two highs is taken out and then there's a liquidity block and then a third high, am I supposed to wait for that third high to get taken out, or do I start looking for my entry model after the second one's taken out since there's a liquidity block after, if that makes any sense?
I'm sure what you said made sense. It's just I couldn't follow along. I would have to need I would need you to kind of draw it out for me. But let me just get over this right here because you're talking about cells and I'm not really talking about cells right now, right?
It's buys and sells, like it
Yeah, so
like it's
we'll
yeah.
go over it right after I like go over this price action right here because you kind of have to draw it out for me because I'm not really sure what you're talking about. You
Oh,
feel me?
okay.
So like if
All
you
right,
draw
yeah,
it
yeah.
out and I can kind of visualize it, or if you can show me like an example on the chart right now, then I could kind of go over it. You feel me? But if you just say like highs and lows, like it's hard to follow along like that.
Yeah, 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 yeah. I'm walking home right now, so I'll do it in about 15 minutes.
Okay, if
If that's
anything, if you can do it at the end of the webinar, that'll be good. If you can't,
Oh
then
yeah, yeah, yeah.
just message in the questions chat, and then I'll go over it.
Yeah, okay, that's fine. All right. All right,
Alright.
thanks.
All right. So after taking out this low, if you took a higher time frame entry, it's just one of those ones like where you keep your stops below the liquidity block. Gold did actually respect the high again. It took out some internal high and then came lower. Decided to come below here, and then had to move. Right. So it's just one of those ones where either you have to thug it through and see yourself in drawdown again after being so much in profits, or uh you just get stopped out or you get stopped out break even, right? So it's just one or the other. So let's see. In terms of entries down here on the 1 minute time frame, there wasn't anything too clean actually. Uh yeah, so after taking out the low, right, the market had a BOS to the upside. So anyone trying to buy after that gets trapped right there. And yeah, I'm pretty sure some people tried taking this as it took out the high, came and took out the low. Uh, because it's at an extreme, that's not something I do, right? I look for more price action because you have to understand there's no clear direction at the given moment, right? All it did was come all the way down to this extreme. Yes, it is Da Vinci on the higher time frame, but also you have to understand that gold's at all-time highs. It can easily violate the low, right? So taking, I think that's exactly what I did, and kept stop loss below the pretty block. Are you talking about this one right here below this liquidity block? Or are you talking about the M1 entry?
The M1 entry, literally what you just said.
Oh, okay. Yeah, I don't like taking extremes like that. I'll be honest. I've done that in the past, and I've got brutally slapped by the markets. So I usually wait for more price action to kind of develop. So kind of like the market telling me, okay, now I'm going up. You get me? Like you don't want to just, okay, yeah, took out this high, took out this low, let me start entering, right? Because it can easily go lower and then do the same thing again and again, and you just get burned, right? You kind of have to wait for the market to basically tell you which way it's going. So this right here is actually really good. As soon as the high got taken out, there you go. BOS to the upside traps the buyers. So now, not only did buyers get trapped on higher time frames, but now buyers also got trapped on the lower time frames. Right? This is something I like to see. Now, unfortunately, there was no entry here. Actually, oh damn, that's a cheeky entry. But yeah, you got your little high, low, whatever. Took out the high, and then did it come for this low right here? I believe it left equals. Yeah, but it took out this one right here, right? So just put this right here. Took out that low, and wow. Oh yeah, I took this trade. So I entered right here, kept my stops below right here, and then I was targeting the highs, right? Where did I target? I targeted. Let's go on the 15. By the way, if I'm going a little too fast, just let me know. And I'll slow down or whatever. And yeah, pretty much. I believe I took the entry and I kept. Yeah, I was targeting the highs, right? So, I was going to take partials above here. Unfortunately, gold didn't actually come above here. I don't think it did. And yeah, so all it did was come lower. I got stopped at break even on this one. And then, because this was during London, and I was asleep that time. So I went to sleep. Before I went to sleep, I went to break even or whatever. And then the market decided to induce lower, which kind of tripped me out. Let's move this over here. So I'll just put this as a liquidity block. And then, yeah, pretty much. So market induced lower, tripped me out, decided to move higher, and what happened? Yeah. So the market decided to move higher, and that's when, what time was this? 5 a.m. London. I don't believe there was any trades on London, actually. Let's see. 3. Yeah, nothing on London. London Open. Unfortunately, during NFP days, that's just how it is. I would honestly recommend being more lenient, right? Not taking as many trades on those weeks. And yeah, pretty much. So, okay, so the market actually decided to move to the upside after that, right? Just went higher. Let me actually skip through all this. Let's go to the next day, or even New York. New York's right here. So during New York, I did see this right here, but I believe there was news that day, so I didn't actually take this. It is very, very cheeky, and to be honest, you could have taken an L, right? Because it is engineered liquidity, right? So it's kind of like taking the trade with engineered liquidity in a way. The low could have easily been ran through, but I did take a look at this right here. So what the market did was just leave all these highs right here. Okay. So all that does is just build liquidity. Okay, so let me put that little tool right there. And then finally trapped the buyers. And then I think this move happened right at news open. Boom, right there. Traps buyers again. Okay, prints another high. And then finally traps the buyers. And then comes into this extreme right here. And then the market flies because of news, right? This is something I wouldn't really like taking. It's not like the most um cleanest of entries. To be honest, I don't like this at all. Only because it's a 1 minute liquidity block. I don't like doing that. If it was like if the market did something like this, let's say it came here, printed some sort of low right here, and then went higher and started respecting overflow right here. Sorry, I drew it wrong. Yeah, let's just draw it right here so you can see it. Boom. If it did something like this, then I would have liked it, right? All it did was just take out this little minor low right here. BOS came respected. I know respected this low right here, but it's just figuring that part out is just like, it's not the easiest thing to do, right? So I wouldn't even recommend taking that because the market could have easily came lower, right? And also, the fact that I took all this low but respected the low to the left over here did trip me out a lot. So I was very, very I was basically just waiting for the market to do its thing. I didn't take any trades this day, because after that took out the high, right? So we have for us to actually look for an entry, it has to take out a low, right? So if it printed this high, printed another high, little higher high, and then took out this low, then it would be nice. But unfortunately, that's not what the market did. All it did was take out the high, pull back, respect it, and then go higher, right? So that's it for gold on Wednesday. Let's go to Thursday. Thursday, 3 a.m. All right, so let's just go straight to the 15. see. So a little engineered liquidity up there. Even if it takes out this low, I don't like. I would need to see this logo for me to actually take anything. I don't believe it takes it out. See, yeah, it just goes higher. So gold started building liquidity to the downside, right? So remember that. And there's liquidity below now. Just mark this right here. Actually, let's mark this one. And then yeah, pretty much. And then after. Wait, guys, give me 1 second. Sorry about that. Okay, so after that, the market decided to go higher, right? Respecting this low. So you have to keep in mind there is liquidity to the downside now. So always keep that in mind, right? The market goes higher, comes, takes this out. But there's still liquidity here, right? So there's no sell opportunities for us. It's just yeah, there you go. So let's actually talk about this price action right here. Okay, so let's go down to the 5-minute time frame. London Open was right here. Nothing clean. Just kept going higher. So what happened was the market decided to take out this low right here, right? Respecting the area to the left. Let's go on 15 real quick. This area right here. Let's just mark out this whole high. All right. So after it respected that area, it had a BOS to the downside, right? Printing this low right here. And then it came higher, took this out, and then went lower, right? These aren't sells we can take because there is a lot of liquidity to the upside. So what we have to do is look for buyers to be trapped so we can take longs, right? That's the best, I mean, the most probable thing to do. Okay, so what ended up happening was the market swept this right here, trapped little early buyers right here, whatever, this BOS. So you got your trap right there, and then came lower, took out this from the left. Nothing too significant, however, you can look for longs after, right? So what ended up happening was there a liquidity long? Let's see. Okay. Came into this inbound. Oh yeah. So I took an entry right here after buyers were trapped. I seen this imbalance got cleared. Not the greatest of areas to take it from, right? But I just looked at this as like a little POI. So I was looking for something on the lower time frames. And then on the lower time frames on the 1 minute, all I did was yeah. So I seen this right here. Took out this high right here. It came for the low. Okay. I believe I took this as soon as the hourly candle closed. No. Yeah. So I took this like this. On the 1 hour, lows were taken. This was the 9 a.m. low. 10 a.m. open, swept 9 a.m. Right? came into this liquidity block per se, and then had a reaction, right? This isn't the cleanest. I mean, to be honest, there's no entry model here. But I did take this. I kept my stops below there though, below here, and then I took this to the highs, right? All the way up there. Obviously, it came lower. Secure 1 to 3 PL. Nice. So yeah, took this right here. And then as soon as gold had this BOS to the upside right here, that's when I decided to go break even, because now that it had this, it can easily induce lower. Okay, if it wants to build more liquidity, it can easily induce lower, right? So if it comes after taking this high out, I don't see it coming all the way back to the extreme, right? It can if it wants to, but I just didn't like it. It didn't look that clean. Plus, it was just a quick move up, so it didn't really stall, build any liquidity. So after taking this out, the next point of liquidity is the low, right? So I went break even right here, and I got stopped out break even, which is completely fine. I actually didn't get to secure. I don't even think I secured anything. That was just BE. And then after that, what I seen was the market take out this low right here. Okay. And then I was like, okay, so this right here was the trap, because you got your BOS to the upside. Induced buyers came, trap the buyers right here. Okay, no extreme entries because there is still this right here. And then I just waited for what the market did, right? I waited on the 5-minute time frame and just looked for a low to get cleared. Okay, so it did all of this right here. I entered right here. I seen one of these highs get taken out, and then I seen the sweep of this low. The market could have came for this right here, right? It could have easily came for that and then went higher. So for that reason, when I entered right here, I kept my stops below this low right here, right? It just made the most sense because it could obviously induce lower, and you don't want to have it too tight, or you don't want to just be too aggressive with it and then end up taking a loss and then re-entering and stuff like that, right? So I took it right there after sweeping that low, and then kept my stops below this right here, that liquidity block that was formed, and then I took it to the highs. What was it? Yeah, the high was here. In terms of entry, it wasn't the cleanest of entries, right? But yeah, nevertheless, it worked out. And the market started moving to the upside. Did all that. And just kept going higher, right? I believe... when was this? Yeah. Market just keeps going higher. This was Thursday, right? Yeah. Goes higher, and then sometime NFP drops. Takes out the high. Okay, there you go. You got your US to the upside. Okay? You got your BOS to the upside, inducing buyers, right? It's an internal high. So, looking for the low to go to trap the buyers. There you go. The market does. Let's see. Okay, there you go. I believe it looks better on the 1-minute time frame. Just go there real quick. Oh no, it looks the same. All right, so what ended up happening was you got your BOS to the upside, right? Induces buyers. Buyers get trapped right here. The market comes comes a bit higher, takes this out, induces even lower, taking out the structural liquidity that was left yesterday. Okay, then you got your little liquidity block right there, and then yeah, pretty much. Unfortunately, this isn't a trade anyone can catch because it's NFP during NFP. So it was clean, but it's not something. It's not something easy to get in. Not something I would even recommend to get in. And then there you go. The market just goes higher, right? So all it does is engineer that liquidity to the upside, have that BOS to the downside, engineer more liquidity, right? Look at it retail perspective. You got your, you got your BOS to the downside right there. Let's say, let's grab this right here. There you go. They get trapped. Sorry. They get trapped right up to right here. After that, I took an engineered liquidity short, right? Only because well, the entire week of last week and this week has just been building liquidity to the upside, right? That's what gold was doing. This is the highest point for gold at the moment. And there's also a ton of liquidity to the downside too. Well, this one, especially, that was left. And so I looked for shorts, little short-term move. I looked at this whole area where I got respected. So now what happened was the market came into this liquidity block, right? Went higher, and then resulting in a BOS, right? So that was a BOS to upside, cleared all the liquidity it needed to clear. And then I went down to the 1 minute time frame and I looked for an entry, right? So what I did was I seen the market print this high, came lower, tapped into the imbalance right here. Okay. And then I just waited for the high to go. The high got swept. And then I was waiting for that little structural liquidity, right? That right there. US to the downside. Pulled back. Sorry. You got your BOS to the downside right here. Pulled back, left this high, went lower, respected this right here, built that liquidity, and then went lower, right? So now there's liquidity sitting above here, and then the market decided to take that out. And all I did was wait for this candle to kind of close. I wasn't sure if it was going to take out the high again. So for that reason, I just waited for this to kind of close and then this one to open up, and then I entered somewhere down here. Like somewhere above here, right? Kept my stops above the high and then took the trade, right? Now, as soon as that BOS to the downside happened again, that's when I moved my stops to this high. Okay. So minimizing my loss if I did take a loss here. And took that entry straight to, where was it? I took some partials. Well, I took some partials here because this was a liquidity block. Could have got respected again. And then took closed the rest of my trade at this low right here. And then there you go. The market just goes straight to TP. After that, I believe some people took longs. I'm not sure who. Can't remember. I just remember seeing a message. Market swept that, trapped the buyers. But you guys have to understand, after sweeping this high right here, right, taking all that liquidity, now the market can either flip from here or it can hunt for this liquidity, right? And also because gold's at all-time highs, expecting the market to clear this high isn't something I like to do, right? Because then you're just predicting another higher high to form. And gold's all the way at the moon, right? So pretty much, I believe some people decided to take some entries. Plus, it's a Friday, right? The big moves already happened. And then there you go. The market goes higher, has this BOS to the upside. Okay. You got your little BOS to the upside, clearing all those highs, and then went higher. So now after that, there you go. Right? All it does is induce more buyers, and then buyers are gonna get trapped. All right, you got your right there, and now hopefully comes for this liquidity down here, and yeah, pretty much, and goes lower. Quite the moves were really nice on gold. Unfortunately, it didn't always give a proper entry. But yeah, this is kind of expected from the markets when it's NFP week. So yeah, anyone have any questions for gold? Any questions? Can you annotate, please? Okay, I'll answer it later after the webinar. But if it has something to do with the current chart, then I'll answer it right here. But if it's some other chart, I'll answer it after the webinar.
Yeah, it's basically the same thing that like what I was trying to understand. Like I'm saying, like see that low right there, the first low you have marked, the one above the your cursor. Um, if I'm saying no, the one above that. Yeah, that one. If there was a liquidity block below that low, would that be a go ahead to look for buys?
Not really. I mean, you have to know where the liquidity is, right? It just swept all these highs right here, so there's no more liquidity. Like, yeah, there is liquidity because it respected this high, but as I said, you can't really anticipate the market to create a higher high when gold is already at the moon. So you just have to look for intraday plays, right? So for example, I took this trade right here and it came lower, right? I got stopped out break even on this one, and it happens, right? The market can easily induce lower. I was trying to take the trade all the way to these highs, thinking gold has to go there right away. But you know, the market doesn't have to do that. It can induce lower and then have the move, right? So taking it from here just because there's, well, you can say this is a liquidity block, right? Obviously, I wouldn't consider this as a liquidity block, but let's say there was a liquidity block here. I wouldn't do that unless there was liquidity above, right? All it did right here was clear liquidity. There's no more liquidity here. It came into this imbalance, cleared all the liquidity that I built going down, right? And then just dropped. So there's no liquidity to target. So longing from there just doesn't make sense. You get me?
Yeah, I understand. But let's say hypothetically there was liquidity there, right? Then after that first low, could you take a buy? Because that's the problem that I'm having. You know, I never know if it's like, okay, this low or this one.
Well, you just have to look at it carefully, right? Look at this right here. I have this marked out right here. There's liquidity below. Are you trying to say if there was a liquidity block here?
No. Like that's why I said if there was a liquidity block. I'm not saying there like there is one.
Okay.
Yeah.
It just all depends, right? If there's liquidity above here, let's say the market didn't sweep this high. Let's say the high was intact, and it stopped like right here, came lower, trapped the buyers right here. Sorry, trapped the buyers right there, and there's a liquidity block here. Something like this. Right, you can easily take it as soon as the slow got swept, right? Or you can just take it from here, from the extreme, and just keep your stops below the liquidity block. You understand?
Yeah. So you never. Well, so yeah, because I was thinking like we had like there was a way to indicate whether we should be buying from this low or this low. So you don't really know. It's just that you just
You go based off of what price is telling you, right? Let's say I was trying to buy here, and there was liquidity above. Damn. All these drawings are hurting my head. Let's say I tried buying here because there was liquidity to target, right? Let's say after this BOS to the upside, I no longer want to be part of the move, right? If there was an entry model down here, I got in somehow, the market decided to take out these highs. I no longer want to be part of the move, right? Because it just doesn't make sense to be taking after BOS, right? Because market could also obviously induce lower. So those times just go break even or just, you just have to manage accordingly.
Okay.
You get what I mean?
Yeah.
So like for example, actually I'll show you if you like this one was a great example. I took the longs here. BOS to the upside, I went break even. The market came back, trapped what do you call it? Trapped buyers over here. I got stopped out break even. No loss, no win, whatever. The market takes out the liquidity, starts moving to the upside. Now it gave some sort of entry on the 5 minute, nothing too clean on the 1 minute, but yeah, pretty much took this and then targeted the highs. Right, and that's the thing. Like as traders, we can't know 100% when the market's gonna shift in direction, right? So we have to look at where the liquidity is. So this example right here, as soon as buyers got trapped, I'm entering right here, thinking the market's gonna come for the highs. But I also take this into consideration, right? This BOS right here, the market can induce lower if it wants to, which it did. Came for this. Okay, so that's when I sat back and reanalyzed and I looked at it. I'm like, okay, so BOS to the upside induced buyers, trapped the buyers right here. Okay, not only did it trap it here, but the market came for the low to the left, right? I did also take this into consideration. There was this right here. So when I did take this, right, I'm not dropping heavy volume. I'm taking I'm taking this according to basically how I feel, right? If I feel like it can come for the low again and then have the move, then I'm not dropping as much volume as I would. You get me?
Yeah, I understand. Yeah.
So yeah, pretty much. That's why you just go based off of what price tells you, right? We can't guess which high and low has to be taken out. You feel me?
Yeah. No, because the reason it was bothering me is because most of the time when I would be in a trade, like people would say like there's liquidity above or there's liquidity here. So I was like, how does everyone know? But it seems nobody really knows. It's just
You just have to wait for buyers and sellers to get trapped. Like right here. Buyers got trapped. I seen this as the trap, right? BOS the upside. Buyers got trapped. I thought the move was gonna happen right away, and then took out this high right here. Now it's the market can induce lower if it wants to, right? So it comes lower, comes for this liquidity. Now, yeah, there you go, right? Naeem said, "We'll never know. It's all based on your confluences." So you just have to look for where the liquidity lies, right? After taking
yeah.
out this high, now this low becomes liquidity. So why would I want to keep my stops below this low? You feel me? So if it comes lower, stops me out break even, I'm completely fine with that. Market comes, takes this low. I'll never 100% know if this low is going to be taken out, right? We can't predict what the market's going to do. We go based off whatever price action tells us, right? After this
Yeah.
BOS tells us buyers are induced, right? I'm still in the buy. Now I would go break even because buyers are induced. Market comes, sweeps the buyer's liquidity, takes this out right here, and then moves higher. When I hopped onto the market, at 8 in the morning, New York time, did I think the market was gonna do all this? No, right? After trapping buyers, that's why I took this trade. And then the market decides to induce lower, which is completely fine. And then I took my trade again. Okay. It's quite late in the day, but yeah, pretty much. Took the trade, still within New York session, and then yeah, pretty much I just took it straight to the highs.
Yeah, that makes sense. Yeah, thanks. It's a lot clearer now.
Yeah, that's what you have to do, bro. Honestly, as soon as you're in a trade, you have to manage it accordingly. If you see BOSs happen and you see buyers get induced and stuff, it doesn't mean close your trade, just manage it accordingly, right? So if it pulls back all the way back to the extreme, it's probably going to take out the low if you're in buys.
Yeah,
Get him?
yeah. Like yesterday, I like there was I think it was a GU buy that I took, but that one was just my mistake because it was another thing that you used to tell me about zooming out and seeing the bigger picture. So yeah, I didn't do that. Then I ended up seeing that after the loss that I was trading with structure. So
Yeah. Let's see. Okay. So this price action right here, I went break even. Why? Because it just had a straight move up, right? When it does this type of thing right here, where it just goes straight to this high right here, now the next point of liquidity is going to be the low, right? So if the market did something like this, where from here it just went higher, right? Sorry, let me just drop down there. Okay, so from here, let's say it just went higher, right here, stalled at these highs, printed some low, went higher, took out the highs, came lower, and respected the low, and then went here. And then after, if the market decides to do this, taking out this low, now buyers got trapped. Okay? So we could potentially see the move go up higher from there. Now, because it didn't do that, right, and all it did was just go straight for the high, causing that break of structure to the upside without inducing any buyers within right here. Now the next point of liquidity is low. So just understanding that, you know, you got to manage the trade accordingly. So I went break even, the market came lower, took me out break even, decided to take out this low right here, and then have the move, right? Pretty much. Anyone else have any questions? Any questions? No. Okay. I'll just quickly go over Euro.
oh, if you don't mind, I do have one more question. How do you determine what do you call it, like a valid liquidity block? Because like I know what a liquidity block is, but it's like sometimes like what I think would be a liquidity block uh would happen to not be a liquidity block.
Well, it just all depends on this. This right here is liquidity block. You get me? Now, if this respected, let's say the market did something like this. It respected this. I don't like it. You can consider a liquidity block. I wouldn't take any extreme entries from here. You feel me? Like
Okay.
I'll still mark it out and just look at it, right? But I wouldn't take any extreme entries from here because there's still liquidity below. You get me?
Okay. Yeah.
So
So
in this scenario, what I would look for is, let's say, does something like this, just keeps going higher, does all that. Let's say it taps into the liquidity block. I'm not taking any extreme entries. I'm looking for an entry model. Right, on the lower time frames, I'm looking for entry model. But that's only if. Let me redraw this. That's only if there's engineered liquidity to the upside.
yeah. So yeah. So the liquidity block, for it to be valid, it has to actually take out engineered liquidity. like it can't just be like a low, because like I've seen sometimes when people are marking liquidity blocks, it'll be a higher high, um, a higher low, then a higher high, and then it'll take out the higher low, and then take out the higher high again. And sometimes I'd see people mark that as a liquidity block. Would that also be valid, or?
What do you mean, something like this? Wait, let me just clear all this right there. You mean something like this?
Exactly that. Yeah.
Yeah, it's still a liquidity block. You just have to see where the liquidity is, right? So if it goes like this, market keeps going higher, and then decides to take something out here, and then have like a short move. Let's say it respects all this right here. Respects it, little BOS to the upside. And then come, oh damn, my fault. And then comes, takes out the low. Now, yeah, you can see moves up, right? Because there's engineered liquidity to the upside.
Yeah.
Whatever you're targeting, you have to make sure there's engineered liquidity. If there's no liquidity, what are you going to be targeting? You get me? You can't just target a random high. Like if the market decides to do something like this, from here, decided to just come, I don't know, just do something like this. Like here, maybe if you take longs, max you could hold till it's like right here.
Yeah.
Because there's no engineered liquidity, right? Also, it doesn't have to go up there, right? The market could easily just do a little pullback, maybe take out some minor internal whatever, and then go lower. Right, so you have to see engineered liquidity. If there's no liquidity above here, then there's no reason for the market to go up there, right? We don't trade with structure, so there's no such thing as, oh, you know, this, I don't know, overall is probably something like this. You know, we don't trade with structure, so there's no reason for us to target the highs. How do I do this? There's no reason for us to target this high just because of the low end. You get me?
Yeah.
There has to be some reason for the market to go up there. Now, let's say on higher time frames. Let's say on the higher time frames, like there's liquidity above here, or like let's say the market respected something like this. Took some low out. Damn. Took out some low right here. Then, yeah, pretty much I would be targeting the highest, right? Because there's a reason for the market to go up there, right? You can easily see, even here, right? I would look for lower time frame entries. Say something like this. Or not even lower time frame, just any time frame, right? I want to see buyers get trapped so I can take it. A little confirmation. Especially if this low was respected right here. And now there's two lows down there. I'm not about to be part of the third low unless the market tells me, okay, I'm coming high, I'm going higher. You get me? A little BOS right here comes into this area right here. BOS to the downside induces sellers. We can long towards the liquidity, right? You follow?
Yeah. Yeah. Follow. Yeah.
So yeah, pretty much. Any more questions? Anyone?
Yeah. Thanks, Abid. I appreciate that.
Okay. You just go over Euro. Okay, so for Euro, I'm just gonna go over the moves. There wasn't any lower time frame entries from what I've seen. But nevertheless, just quickly go over it. I believe we hit, yeah. Okay. So Euro did. Yeah, let me just mark everything out. So on the higher time frames, Euro came for this right here. finally came for the highs I've been screaming about. And then after that, you can see some sort of sell-off happen, right? Now, let's see. Yeah, so what ended up happening was the market started moving to the downside, right? I'm not really too sure about how far down it can come, right? So I just have to see what euro does, to be honest, and then just go based off of that. Because it took out this right here. Now, if it wants to, it could just take out, just trap buyers on H4 and then keep going higher. On the daily, right, there was this whole area right here that got respected. Okay. So yeah, let's just go over price action. All right. So what euro did? Let's go on Monday. Okay. So what euro did was on the hourly time frame, okay, broke the lows. All it's just been doing was taking out the lows, respecting the highs. So you know there's liquidity above here, okay? There's liquidity above here, and yeah, pretty much. So comes, takes out the low, just builds that liquidity, and then what ends up happening is the low gets taken out right here. I believe, yeah. So it respected this right here. Respected this area right here. Just change its color to gray. All right, so respected this low right here to the left, and then what did it do? Took out this high, inducing some sort of buyers, and then came lower and swept the low. Black. All right, so after sweeping the lows, the market started moving to the upside. Okay. Came into this high right here, right? And you can possibly see some reactions from here because it did take out the high. There's also liquidity above, so that's the reason why you'd be targeting those highs. And as I mentioned, there is liquidity above here. Okay, so quite clean. Respected the low to the left. Little BOS to the upside, induced buyers, came, trapped the buyers, and then started having the move. Okay. Now it took out this high, but all it's been doing is just creating higher highs, right, and higher lows. Little order flow right here. Got your rest of the upside. Came, trapped them buyers. Went to the extreme. Over here. Okay, so a couple things. Euro can obviously decide if it decided to induce lower, it can obviously come out, take out these lows because it is some internal. And the market can easily do a full Da Vinci, right? So think about it this way. Comes all the way to the extreme at this high, engineers that liquidity, can come all the way down below, clearing all this, and then finally have the move. Now I believe someone did take the trade from here. I wouldn't say it's not valid because let's go on the 1 minute. Oh God. Okay. Right here. There you go. Little trap the buyers came, induced buyers on the lower time frames, on the 1 minute time frame, trapped them, came into the extreme of this liquidity block, it can easily respect it, right? Take out some internal, and then let's say it comes for here. After taking that out, it can easily come lower if it wanted to. So I wouldn't knock anyone taking this trade from this liquidity block right here from the extreme, as it's already done the trap on the higher time frames. So like not really higher time frames, but like the 15 intraday time frames, and then trap them. Right. So for that reason, I wouldn't knock anyone taking this trade. This is a liquidity block. Even though it respected this right here, I personally don't like taking blind entries from here. Now, if someone's more comfortable taking blind entries from these type of liquidity blocks, you can obviously do that. At the end of the day, it does come with experience and everything too. And yeah, pretty much. So all that liquidity right here got cleared. Got all that liquidity get cleared. And then also there's a ton of liquidity to the upside, right? News did come out which shot the market to go higher and finally come for these highs. After that, I don't believe there was an entry. Look at the 1 minute time frame. Yeah, there's no entry, to be honest. Took out this low, right? And say this right here. Oh damn. Turn that. Okay, black. Took out the low right here. Trapping buyers. If it gave some sort of entry model here, it would have been nicer, right? There's no possible entry unless you took it from here and kept your stops below. Not even this, because now that's liquidity. So yeah, there's just no entry there. Maybe below here, some sort. I don't know. Regardless, you couldn't have taken any higher time frame entries from there because there's just no entries on the higher time frames. There's no clean liquidity block. This would have been nice if it did something like this. Boom, took out the low, and then went higher. Maybe entry here, but to be honest, it's too big of a stop loss. And then it just kept going higher, right? It didn't really give no entry model. Just printed a high, printed a low, just kept going higher. So no entry there. The market after that took out this low. Now that was quite nice because there's engineered liquidity to the upside. Respected this high. Okay, trapped the buyers and then went higher, right? So think of it this way. There's liquidity below. Market comes into this area. You get your little BOS to the upside. You get your BOS to the upside right here. And then the market goes lower, clearing that liquidity, and then goes higher, right? Same thing goes for this right here. No entry because your stop loss would just be too big. Unless you're okay with a 9.9 pip stop, possibly more. That's not an entry you can take. Anyhow, the market goes higher, keeps going higher, and then comes and respects this right here. Now, it is a liquidity block, but it's kind of a structure, so I don't really like it. And then, yeah, pretty much. In terms of the market just building that liquidity for NFP, that was quite clean. Built that liquidity. The market opened. NFP decided to respect this low right here, okay, and then go higher. So all that does is just build a ton of liquidity to the downside. Okay. So right here. So pretty much, actually, this got respected. So second. This is the low that got respected. So all the market did was grab all that liquidity, okay, to the upside. I believe it came for this and respected this one. Okay, market came for that and then started moving to the downside. Unfortunately, no entries, as all it did was just create a low, pulled back, and then just kept going lower with order flow. Right now, after this low went right here, the market decided to move to the upside. And yeah, pretty much. You can't really like, how do I say this? You can't really predict too much, especially on NFP days. Unless every pair went down with Oracle, except gold. Yeah, pretty much. But yeah, you can't really expect too much out of NFP days. You know, you just go for either if you like. I would personally, I don't like taking reversals. I did take a reversal on after NFP, but I had my confluences lined up, so that's why I took it. But regardless, yeah, you can't really expect too much out of the markets on NFP days, right? So the market builds that liquidity for NFP to take out and then have the move, right? So once that happens, like the market's usually just cooked, right? There's not much you can get out of it. So you just have to go according to, you know, whatever happens next, like the next trading day. Obviously, if it's NFP, then the next trading day is Monday. So you just have to basically let price develop more, and so you can properly build a bias. You get me? So that's it for Euro, because all it did was just leave liquidity for NFP. And then, yeah, the only possible trade was on Wednesday on Euro. But other than that, nothing much I see. Well, nothing to be honest. And Friday, but no entry. Any questions? I have a question. I'll put it in. Okay. Yeah, so I'd like to say a couple things. First thing is on heavy news weeks, I don't recommend anyone trying to force trades or, well, to be honest, I don't recommend anyone forcing trades anytime. But especially on news weeks, especially high impact news, to be honest, NFP days, especially if you're new, should be written off, right? You shouldn't be looking for anything on those days, especially if you're not like too experienced with the model in itself. Um, to be honest, if you don't have much experience of the markets in itself, you shouldn't be trading NFP days. Any types of news, well, any high impact news, so CPI, NFP, you know, FOMC. Those are the days where you kind of want to, you know, sit back, just watch the market. If you want to, you could demo trade it or something. But I don't recommend actually involving yourself into the markets unless you have a ton of experience. You know, like if you're very new, this isn't something you should do. But yeah, to be honest, the entire week is usually written off, right? I only get a couple of entries throughout the week. It's -5 week after passing. Yeah, that's what it does, right? No, that's what it does. You got to understand, you gotta wait for the market to kind of be favorable, right? So what tends to happen during high impact news weeks is that the market respects structure and builds that liquidity for news, right? So all week you'll see basically retail win type thing. You'll see retail on the good side of the market or whatever. That's just how it is, right? So it's like that. I wouldn't, to be honest, especially on NFP days, weeks. I would just look for, let's say, intraday moves, unless it's like I would only look for intraday moves if it's very clean. If I don't see anything clean, I'm not gonna even hop on. Right? There's days where I just looked at the markets, but I didn't even take anything. Right? That's just how it goes. I didn't even open the charts today. Very bad experiences in the past. There you go, right? Everyone has bad experiences with NFP, CPI, all that stuff. So you just gotta stay disciplined, right? Not trade on those days. And to be honest, throughout the week, you also have to understand the market's gonna build the liquid is gonna build liquidity for NFP and stuff, right? So if the market's building liquidity, what does it do? It respects structure, and we can't trade with structure. So it's just weeks where, I'd personally hop off. Don't look at the markets unless there's something very, very clean. All right. Everyone understand? No, I'll take that as a yes. All right, so I went over gold, euro. If no one else has any questions, you have time. Tomorrow is a new day. Yeah. Yeah, so if anyone else has any more questions, just ask it in the question section. I'll get to it as soon as I can. And yeah, pretty much. I hope you guys were able to follow along. And I hope I answered anyone's questions. So yeah, I'm just gonna end it here, and I'll see you guys the next time I do a webinar.